to talk about maybe some cryptos that I'm interested in, some altcoins, maybe some strategy. Yeah, so I've got some favorite people that I listen to from time to time. And it seems like most of them are thinking that the bottom's already in with this red candle here that happened on 18th of June. One of the things I've learned in my studies, the way that I study, is that we're almost always going to get max pain before we get max reward. And so what I did is I did a little study going back through the entire chart of Bitcoin and trying to find out, is this candle here, is that long enough to be, is that a long enough ending to allow for the beginning of a bullish trend, a power bull that's going to make us lots of profit? And so I basically just went back in time and just looked at the length of the candles that usually create ultimate pain, which comes prior to ultimate reward, right? And I went back through the whole chart and I found out that this is really a small candle. I don't think it's ultimate pain. Therefore, I think that we have further down to go. I think we might go down and touch below 61.5, maybe even have a candle or a wick. For those of you who don't know what a wick is, that's the skinny thing on the bottom there, or a wick that comes down below 60K. Now, 60K is considered by many to be the invalidation of a bull run, the invalidation. But if we have a red candle and only the wick goes below on the daily chart goes below, but then it closes above, so we basically have a strong red going down and then a wick coming down and up, then that's considered not a invalidation of the bullish trend. So we could get a wick that actually comes below 60K to produce max pain. So I'm thinking a wick below 61,500 to maybe even below 60K to create max pain. So that was a study I did just comparing the size of these candles that come before a big rise or a rise, right? But especially the bigger rises. We can look back here and see immediately, with the naked eye here, that even small changes have bigger wicks, bigger candles than this. Even the small change here has a bigger red candle here. This red candle is more than twice as big. So is this one. And also pay attention to the fact that sometimes we're going to have a long red candle and then a revisit. Look at this. At one point, this was a long red candle, making you think it's going to go deeper, causing you to get scared out of your mind and sell around here. This is how manipulation works. Everything will be tried to scare you out of your money. All right. Let's see. Here was a good reversal. And this reversal had a long red wick, probably 3 times bigger than what we have here. So I went back, but then again, the volatility here is much higher than the volatility here. Volatility here is much smaller candles. So that doesn't necessarily mean anything, but I went back in time looking at even lower volatility scenarios to see if this candle's big enough for a reversal and deep enough to create ultimate pain. And through everything that I looked at, I just don't feel like ultimate pain has arrived. Now, another way to look to see if ultimate pain is finally here is using this indicator that's called super trend. Super trend right there. So super trend, when it turns red, then that means that's considered a bearish sign. And usually we turn into red. Basically, you get out of the bearish by going above the top of the red. And you get out of the bull trend by having a candle that stays below the green right here. So this level, breaking below this level, created a red, right? So I think this may be another sign, the fact that we haven't got a red yet here. I think we're going to go into super trend red zone before we actually break to the upside, because I think we need that max pain. And so aside from me going and measuring candles, that was what I did before. Now I'm also looking at the super trend indicator to see if it also shows us where max pain is located. Right? When this candle moved below this important zone here, that indicated max pain. And so that red zone kind of gives us another way to look for max pain before max reward. Okay. So let's just look at this. Let's look at history. Shorten that up a bit. All right. Actually, let's open it up a little bit, make it a little more viewable. There we go. Boom. All right. So let's look here. Now, one of the places you're not going to find this become true is when we are in the middle of a super bull. A super bull. Right now, we're preparing for a super bull to blast off. Super bulls, once they blast off, they usually try not to give you a chance to get in. Because the people who bought during these red zones, the manipulators, and the people who bought during the red zones, during this deep drop here, when everybody else sold out of great fear, those manipulators they want to buy and they want to keep it. So often what these scenarios lead to is a super bull. A super bull can look like this. In a super bull, we're never going to reach a red zone, because the super bull only begins after we've created super uncertainty and super fear. So just like this up here is meant to do that, this down here was meant to do that. All green, 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 and then guess what? Like the people that think this red candle here was the beginning of the next bull, well, guess what? They are the same people who thought this candle right here, they thought that was the beginning of the next bull. But the super trend is, I think, what we're going to find in most cases, turning negative, turning red, is what we're going to find in most cases, which gives us the ultimate pain. The ultimate pain was all the way from here up to here, all the way down to here. So we see here we did get a red zone before the super bull happened. I think we're going to get that red zone here too before the super bull happens. Let's see how common that is. Let's look around. Okay, here we had another super bull. Super bull. No chances to get back in. People were scared to get back in. They thought it goes up to here, it's going to crash down, right? Because we've seen stuff like that in the past. We got trained. We got trained to be fearful. So, super bull here, after we're trained to be fearful, right? Looks like here was a short little super bull, right? And then we had moved up to here. We crashed down hard, right? These are training us to be afraid to get in at any of these places because we're afraid a super crash will occur, right? That's what these are for, to train us to be scared and to avoid getting into the super bull. All right. Now, after this mini super bull, we turn into all red. That all red happened simply because of this last red candle here. As soon as this red candle passed below this line, that is what turned this into the super bearish, right? And we needed to get back above this top to create the green zone again. So this one stayed in effect for a long time, and then we were red before the next bull occurred. Then we went up to here. Now look at this. We just talked about how there wasn't much volatility. Look at all the volatility here. Look at all the big candles, the big red candles. Look at all of those. Up here, small candles, small candles, small candles. We're being trained to think that small candles means small drops, right? That's where we are today, way up yonder. I'm not going to show you again, right? We're being trained to think, look, small candles mean small drops. But guess what? Humongous drop took us into the red zone before the next bull. And so that's why we keep seeing this happen. And that's why I think that we're going to have a painful drop before the next rise occurs. It happens over and over again. Sometimes it happens real quickly. Look at this. We got some big candles, heavy drop here, rise up higher. Rise up higher makes us feel like, look, there's a trend, an upward trend. We can draw a trend line there. Some of these candles are big. Some of these are big drop here, blah, blah, blah. Then we have a big drop here. And that's where, this big drop here is where all of my buddies are going to say it's going to rise from here. Because they're not paying attention to the fact that Max Payne, red zone, there it is. They are satisfied that this was the end or this candle was the end. But no, it was max pain we needed to begin the new bull up. So there's the red zone crossing below this green. This candle here is what created the red zone. And then it continued down to really terrify everybody because we had a bunch of buyers. We had buyers lined up. Look at this right here. Buyers are lined up like crazy below this zone. They're lined up. And all of those buyers ended up selling on great fear when because this cute little wick here was actually a solid red at one point. Tell me they weren't scared crapless into selling everything they bought in this zone where they were waiting to buy at a great price. So there's another example that we might move into a red zone like that before we rise. This right here is kind of like Super Bowl, right? No red zones during the Super Bowl. But right before the Super Bowl, we always have a red zone right before the Super Bowl, right? Here we're in a bearish scenario, so that doesn't help us with what we're looking at now necessarily. Or maybe it does, right? Maybe it does. Well, not so much, because we're looking, this is near a bottom or a middle, and we're currently at more of a top, right? We've been rising and stuff. So let's just kind of go back to where that's taking place. Look at this, by the way, super bears, no green zones. All right. This looks like it's a middle low zone. We got much higher up here, but we can still scan that a little bit. We could say green. Well, this doesn't count as much because it's a middle zone. So the red and then the green and then the red and then the green. And then this red, well, there, we could have seen this rising, right? We draw a trend line right through there, right? And we think, draw an equal trend line, rising, 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 rising. And then this drop occurs. It doesn't really, that's not the same though, because we're not in a higher area. So we're used to the red zone showing up even when we're going to rise, kind of rise a little bit. But then this one continues down. That's the thing that we're going to be afraid of and have to watch out for. But let's get to back where we're at now. We're at highs. We're at highs. How do we view from up high? Okay, so once again, we hit a red zone before a power rise. This is a topping formation. A little bit different than what we're looking for. But who knows? Maybe we're in a topping formation, right? So maybe we'll know when we're in a topping formation. I don't think we are. But here we had up, we had red zone created by this fall here, which then went a little bit deeper for ultimate pain, creating the red zone. Didn't escape the red zone until we hit this high here. And of course, that was just to go high enough to come back down again, right? And so, we can see something like this, right? This is rising. It looks like, we draw a thing here. We drop below that trend line there. We drop here thinking it's ultimate pain. We buy. If we're lucky enough to know about this ultimate pain thing, we buy in here. And even though it's leading toward a bear, we actually could have escaped somewhere up here having bought low. But if we're listening to everyone else, then we're assuming that this low here, like where we are now, is the new low, and we're buying in here, and then we get scared out of our buying and we sell low, right? So just another example of where the red zone can show up. Here we go into red zone on this candle here that drops and creates a nice wick. Then we have a secondary wick. So that happens before that little bull happens. All right. Here we're going along. Everything looks good. We've got little trend lines drawn. We're thinking maybe this low here. We're thinking maybe this low here, because it's broke below this trend line, right? The trend line at the bottom of the wicks. So we're thinking maybe this one here was good enough, and then we'll go up from there. But what happens? Red zone shows up because a red candle breaks through, and that happens before the next nice trend up. All right. Then here we have a super bull that tries to keep us from getting in after participating in a situation that we're thinking we're in now, right? So here's the situations that were before the super bull, right? The situation was total green zone, rise up total green zone. But then before we go into super bull, we hit max pain, which was this one here. And so that comes along before we get into super bull. So those are all the examples, right? Now, this one here did not go into max pain before rising. So we finally have an example. We finally have an example of something that doesn't go into max pain before rising. But this was coming out of the pandemic. It looks to me like that's that pandemic one there. Yeah, that's definitely it. Pandemic called here, took us into the red zone. Red zone took us down further than we've ever fallen before, practically. Incredibly powerful fall. So this creates a powerful rise to equate to the powerful fall. And at the same time, if we can take a look at global net liquidity, actually, in other words, they started printing money like crazy. Printing money started here and blasted the heck off. And when you have global net liquidity rising powerfully, then you're going to have it pulling the markets up. And that's what it did. So not only a rubber band effect from super low, pulling this up, creating a high that then pulled this up. So in this scenario, we have no red zone here because we have, number one, money printing is going crazy. It is going crazy at this time because they're trying to protect us from going into a depression or a recession because of the announcement of pandemic, which is what caused the super crash. Super crash is they started printing money like crazy. And so are we currently in that kind of a scenario? Is this a one-off? Is this a unique situation? Yeah, this is a unique situation because of being super printing of money and coming out of a pandemic, creating a very bullish scenario to push us up until we get to a normal place where we get back to the normal red zones. So are we in this situation now? No. Was this a one-off? Was this a unique situation? Abso-frickin-lutely. Coming out of one of the deepest drops we've seen in a long, long time. But besides all that, well, back here, that was, what was that, 2019. 2019, we did have this red zone before the Super Bowl took off, right? That was 2019 when, 2019 to July of 2019, when we had a nice Super Bowl takeoff. Once again, in Super Bowls, they're trying to avoid letting you back in, right? All right, bingo, bango, bungo. Let's see what else we got to look at. So let's look at the really powerful bull. Oh, AMG. Look at that really powerful one back, the one that started off the whole Bitcoin craze. And just take a look at this. Hello, sexy. So, red zone hit before Super Bowl. Red zone hit before bull. Red zone hit before bull. Red zone. What are we saying when we say red zone? We're saying max pain, max droppage, lower than we expected, so much lower than we expected, right? Now we get the freaking idea. Bada bing, bada boom. Hey, did I take too long to show that to you? Yeah, I did. But if it saves us a bunch of money, if it makes us understand what might happen today, then OMGG, is it not worth it? So what do you think, guys? Do you think I'm right? Do you think we drop below this little thing here and that the red candle stays red and not just a wick? And do you think it might be the most painful moments that can even bring a wick below 60K? Do you now see the possibility of that? Okay. And one more reason why I think this may occur. Because let's look at open interest. Open interest. Great little indicator. Open interest is in a long trend. See the red zone. The red is a long trend downward. Long trend downward. Within the long trend downward, we have trends that are rising. This one starts rising because it drops hard. It basically does a down step during a rising area. And it starts a new rising trend that begins at the beginning of this whole area here. At the end of this area here, look at this little red guy right here that we keep talking about. And look at where we are in this rising trend here. In this rising trend, we are still within the yellow and the rising trend. Such a safe and lovely place to be, right? But let's look at the previous scenario. We're safely in our snuggly little blanket. Here we are in the middle, just like we are now. And what happens to reset things is we have a giant reset to a whole new level. We go from top of the longer down red trend. See the red area here? That's downward. We go from the top of that down to the bottom of that, right? And then we start a new rising trend, and now we got way above this red trend here. We got way above it, the highest I've seen actually, and still we're high above the red trend, right? Which could be an indication that we drop, but that doesn't always mean anything. Sometimes this drops while we rise, and sometimes this drops while we drop. So actually, this isn't really guaranteeing anything, except to say the fact that we're above the red may indicate that we will have a big drop in open interest. But sometimes that drop happens while we rise or while we fall. So take that to mean what you want it to mean. I just wanted to show that to you. So I feel like, as I said, we may have some max pain coming. I could be wrong. But everything we looked at in the past said I'm not wrong. It said we should drop from here. There was only one instance where it didn't happen, and that's where we came out of an ultimate. Drop, pandemic drop, right? I did tell you about. What is that one called again? Global net liquidity. Let me just take a minute to show you what I'm talking about with this global net liquidity. Okay, so you can see a big picture here. Let's show you a big picture here, okay? Lift that sucker up. All right. This has taken us all the way back to that. Now you can see, let's get rid of all the craziness on my chart, most of it. Now you can see how deep that was, how deep the pandemic scare caused us to drop this deep. Do you see anything that deep anywhere else? Well, kind of. Over here is kind of that deep. Not quite, though. Up here's deep, deep, deep. I think this one's deeper. But this is a complete drop all at once. And then I said this moment here didn't go to the red zone. This was the only moment, really, that didn't go to the red zone, except for moments that are contained within a Super Bowl, right? But this right here, as I said, was because printing of money occurred. Now let me show you what that looks like. Let's take a look. Global net liquidity, let's turn it on. Look at what the heck happened, bro. Bros and brosettes. Money printing was okay here. It was at a high. Then it was chilling out. Money printing was chilling out, right? You know what? While we're talking about money printing, let me just show you what that's related to. Okay. Now, money printing was on a low here. No big deal. Why did I tell you that there was so much upward pressure at this moment that we didn't get a red zone? Why? Because the pandemic announcement caused so much fear that the government started buying debt, the Fed, the Federal Reserve, started accumulating debt. And basically, it's the same thing as printing money. And they did print money. They sent people checks. You remember that? That's part of this rising yellow. Part of this rising yellow. This rising yellow was a secondary reason why this didn't turn red. This didn't turn red because money, look at how much money is being printed into the economy. Look at it. And also, we just were rebounding out of this. So much pulling us upward. Now you can see why this didn't turn red. Are we in that situation now? Are we in that situation now? Look at this. Print, 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 print. Level off the printing. Now, why did they want to stop printing money? Why did they start raising interest rates? Why did they start tightening? Why did they start taking the money back out of the economy? That's what this falling yellow is. Why? Because look down here. Look down here. U.S. inflation rate. U.S. inflation got to a high of 9%. And the Fed and the government believe that we must bring it down to 2%, down to our normal 2% target. Where is 2%? 2% is right about here. See, 2%. That little blue zone there, that's 2%. And so the Fed said we are going to tighten, tighten, tighten because we must avoid superinflation. Look, superinflation was beginning. 9%. Superinflation was beginning. They said we must prevent superinflation. So they tighten, 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 but they also have to balance things. They got to tighten enough to bring back inflation down to their target of 2%. There's our target, which we never reached, did we? Look at this. Never reached it. And while at the same time avoiding a depression or a recession. Avoiding a depression or a recession. So it's a balancing act. How do we bring back inflation while avoiding a depression or a recession? That is the balancing act, the rock and the hard place they have to play with. Okay? And so they went ahead and lightened up here because we got to a lowest point here. The lowest point here scares the heck out of them that maybe this is going to create a depression scenario and things are going to crash hard. They can't allow that, right? So then they loosened up a little bit, right? But while they loosened up, the interest rates continued to fall. So they felt happy about that, right? But then as this bull powers up here, then they get a little worried and they start tightening. So let's look at tightening, taking money back out of the economy. If money's taken out of the economy, people cannot buy the stocks and the cryptos, okay? So they take money out of the economy. Now we reach a new low of pulling money out of the economy. During that new low, we go sideways. Then they're trying to bring this down to 2%. They couldn't do it. The best they could do is bring it down to 3%. This line here indicates 3%. Okay? And we're just skimming above 3%. They can't get it down to 2%. They want to really bad, but I think they're going to have to figure out they're not going to do it without throwing us into a depression or recession, right? So here we rise up here, and we get a nice bull during that time, right? Bull. Because sometimes this predates what's going to happen. So this rise here predated this rise here. Now we fall down to actually kind of the previous low here. And well, it's kind of interesting. Let's take a look. Let's take a look at where we are now on this global net liquidity situation. Let's go ahead and get just a bigger, nicer look at things. Okay. And I also need that guy to look more, so we can see what's going on, right? Okay, now when we look at this, we can actually exaggerate it a little bit. And we see that I have a line marked. See this line marked? This line is related only to the yellow line, right? If I move the yellow line, that line goes with it. Now that line is because people are saying that we need to, see, this is actually, I think people call that other thing the DXY or something like that. It's related to cash. I can't remember. But I think global net liquidity is more useful myself than that DXY cash that everybody watches. But anyway, we have this little line drawn, and basically we think that if we drop below this yellow line, And look at how interesting things are going. Hold on. Got to dismiss something. Dismiss. Oh, great. Won't dismiss. Okay, that's good. Sorry, guys. Had to keep the recorder from being interrupted. Look at how interesting the money printing, money tightening, and Bitcoin lowers. Money printing and Bitcoin rises, right? Well, from what I've looked into, it looks like if we go below this line right here, which happens to be, well, I do have that line marked somewhere, but 25299, somewhere around there. I don't know, whatever. But if it goes below this particular line here, or if you want to create that line yourself and go find the global net liquidity thingy, I'm such a professional. Then just draw your own trend line below this recent low. Draw yours there. And if it goes below that recent low, then that could also be something that happens and that brings on this red zone. That could, people are saying that dropping below that and staying below that for a minute could mean more downside. And we are near it. We were below it. We skipped above it. But what if when this drops, right? And we noticed in times past that when we get below this green line here, that the candles get bigger and the drops get bigger. And so if they're saying that this going below here will scare the heck out of people, well, then maybe that adds to the truth of the big red candles happening here. Just another possible indication. Okie dokie smoky. So next, let's talk about some actual altcoins that might be interesting. Okay, so I really love, even though it looks like a disaster, I really love this way of looking at my various coins. Basically, the way this is organized is these are all in logarithmic. These are all in logarithmic charting, right? Because if you don't do logarithmic, you get very deceitful ways of comparing the past to the future or the future to the past. If you have logarithmic, you can always, the shape of this is going to be comparable to the shape of this, and it helps you to see where things are going. And the fact that SOL is higher than INJ is higher than this is all related to how high they are in price. See, SOL is at 138, INJ is 20, Render is at 770. Go all the way down, right? You get lower. SHIB would be way down here. I like SHIB, but it messes up my chart. Let me show you where SHIB is comparatively. SHIB is way down there. Forget about this. This is separate. This is separate from all of these. I put this on here so I could be movable. I can't move all the rest. Forget about this. So just comparatively from these to SHIB, SHIB's way down here. SHIB's at 0 cents, whatever, 0.0 whatever. So that's why I'm keeping that off there. Even though SHIB actually looks very interesting. Okay, so let's just talk about, first of all, let's take a look at how healthy is Bitcoin compared to some of these other coins. Let's just take Bitcoin and put it over here with Solana. Let's make it kind of match in height and depth. If we're going to do that, we should raise it up a bit. Let's compare. Now, everybody's saying, and it does look like Bitcoin is in the most bullish scenario. You see this little line here that goes with my cursor. Well, I suppose I could just make it a little easier and create a little ray gun. Let's look at Bitcoin and let's just create a little line to look at. Oh, that brings in all my other stuff. Oh, goodness, let's not do that. I don't want to do that because I don't want all of this stuff right now. It's just going to give you guys a headache. So get rid of all that. Well, I hope you guys can see the little line. Anyway, when I put my line beneath where Bitcoin is now, you see kind of a trend. And what you see is that in the past, look in the past, that the top was basically below and trying to climb above that line. But in the future, Bitcoin is above that line. That looks bullish to me, right? So basically, Bitcoin is the most bullish of our entire chart. I tend to like altcoins because they tend to have more potential of percentage rise and make me more profit. But Bitcoin appears to be the most bullish of everyone else because it stays above that line and because look at how kind of flat it is. Okay. Now, actually, if we compare that to, let me make it a little more comparable. If we compare that to Solana, well, actually, it's interesting because Solana was up high. Let's see if we could create a trend line for Solana. Basically, I would consider that highest part to be poking above the trend line. So I put the trend line about here. When we do that, we see that Solana is bouncing under the trend line. So is that bearish? Does that mean Solana is more bearish? Because we also see that Solana, let's take a look here. Solana did a lot of rising, right? It's up there close to its previous high. Now, when we think about global net liquidity, how it's been dropping through a lot of this process, when we think about that, who knows? Maybe a lot of these coins don't get above their previous high, right? If global net liquidity was much higher here and much lower here, maybe it doesn't get above. So maybe Solana is near a high, maybe it falls when Bitcoin does its final fall that we're talking about, which should be the safest fall. Bitcoin should be the safest fall, the least dramatic, because it's the healthiest. But when it falls, who knows? Maybe this falls harder. Maybe eventually creates a double top if Bitcoin takes off. I don't know. So maybe Solana, because it's like under the previous, it never got over the previous. Maybe it's at a top. Maybe it's not that safe. Injection protocol, injection. So we're basically saying Solana did a lot of rising. So maybe we don't want to get into the ones that did a lot of rising and got near their previous top. Maybe not. Okay. It looks like Render. Unfortunately, we don't have Render. We don't have a longer to see how high Render was, to see if it's bouncing off the bottom. We don't know. We don't know that for sure. Maybe Render has more to go. It's interesting. But yeah, we don't know for sure about Render. But Render does look like it blasted up, blasted pretty high. Now, what we could do is we could try a trick, right? What if we took Bitcoin, and if we agree that Render followed a certain pattern of the end of Bitcoin, if we agree with that, then maybe we can assume that the beginning of Render is similar. Okay, so if I was to do that, well, I would notice that when we match Bitcoin with Render here, it looks like Bitcoin might have fallen more than Render to get to this point here. So if I was to guess where the high would have been on Render, if Render was around longer, I would actually feel like I need to shorten up Bitcoin a little bit, possibly, make it match this point here. And then I would say that perhaps this would be where Render would have been in the past. So let's go ahead and draw the line on the top of Bitcoin. This is just a little thought experiment. Who knows if it's valid? But according to this guesstimate, it looks like Render may be currently above its current high if it had been around longer. Above its current high. Maybe that is bullish. Maybe Render has more high side. I know that's a ridiculous trick, but maybe it works. Maybe it works to help us understand Render a little better. I do like that Render rose, and after all the falling so far, Render is still maintaining a high point, hasn't fallen back to this previous high. Because sometimes it could go up. Like right here, this was the low below the previous high before a new rise. So maybe we can even go lower to here and still go up on Render. I don't know. For me, I'm a little uncomfortable with Render, and I feel like I have better prospects. Okay, so I think I might avoid Render myself. I might avoid Render. I might avoid Injection. I might avoid Solana because I think I have some better options. Now, we see that these are all comparative in rise on price. Take a look at this. look at Matic. So Matic, let's just go from here. Matic, way back in 2019, so Matic's one of the oldest coins. It rides along, and then it goes from here, OMG, it goes from 0.02 cents. Oh my gosh. It rises higher than any other historical thing that we have on record here. But then again, some of the other coins are not old enough for us to see how high they would have rose. That's a very valid point. But Matic went from 0.02 all the way up to 183. Oh my gosh, that is like 0.02. Oh my goodness, 0.02. That's like 100x gain or something. I don't know. Maybe 90x gain. I don't know. Wow, incredible. Yeah, come to think of it, we can't really compare Matic to these other ones because we don't have a chart going back far enough to see what they would have done. So that being the case, I think we have to just look at. Well, we do have a strong rise here, a lower rise here, lower high here, higher low here. So this does look like it may be creating a triangle, which could squeeze and maybe create a rise from there, a powerful rise from there. So maybe Matic has got it going on, pretty good. But let's see. Let's just take a look at it. But Matic actually is already as low as back here. When I look at GRT, which has been one of my current favorites, I see that GRT is above like this previous high. Matic seems to be below all the previous highs here. But the shape may make us think that this extreme down here, going up, that this could go to an extreme down to match that, to match this. And that would be extreme fear, extreme pain, before a rise. Maybe. I would say that's possible because the reason why that's possible, let's take a look at it, just make it look smaller. The reason why that's possible is because Matic did a power rise, but then it stayed, look at this angle. There's like this rising angle. It didn't come back down to these lows. It's like currently in the upper 1/4. The upper 1/4 of this rise. That to me is a bullish looking event. And so if we take that, and yeah, it's true, we don't have data on some, but we do have data on Bitcoin. Like Bitcoin rose up, Bitcoin stayed up high. Let's take a look. So we can compare it to Bitcoin. Bitcoin did the big rise. And then when Bitcoin stayed high, well, Bitcoin didn't do what Matic did. Matic actually stayed much more stable than Bitcoin, right? Bitcoin ended up dropping all the way to the halfway point here of this rise, right? Matic didn't do that. Matic really showed a lot of resistance to dropping. Look at everybody else that dropped when Matic didn't drop, okay? Forget about all this and just look at the fact that when these guys dropped to this low, Solana dropped from here to this low. Matic from here to this low. Bitcoin from up here to this low. All of those guys dropped there. And what did Matic do? Matic actually bounced up during that time. That feels bullish. It didn't do, that feels bullish. And, but then when Bitcoin did the power rise, well, Matic also didn't power rise. Right? So it looks like Matic is creating maybe a squeeze, a triangle squeeze. That would go line going directly down to here. That would go line hitting here to up here. I wouldn't be surprised if Matic drops out of the triangle to make everybody who's thinking it's going to bull run, to make everybody sell. It drops out of the triangle to get everybody to sell. I've seen that before. Maybe it drops as far as this low here, this extreme here. Maybe it drops as low as that during our Bitcoin drop, which should be the least of our drops, while this drops hard, while everybody else drops hard, everybody drops hard, right? So what am I going to do? What am I going to do? Look, I can say that it still looks like we're overall bullish, right? We're overall bullish, and that we simply want to participate in the red zone so max fear can occur, and then we take off to a new bullish scenario, right? What have I got marked off as a potential bullish scenario? Well, look at that. That could be a new bullish scenario. But that's not actually from me. That's from one of my buddies that I like a lot. So I'm not going to steal his thunder. I'm going to give him credit. That's not him, but I do like this guy. Oh, where is that old boy? I'll tell you what. Anyway, I don't know why he's missing from here. Crypto Moon. Rect Proof. I bet if we back off away from this guy, we'll find him. Go back. Go back. Go back. 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 Wow, I was really looking at this guy's stuff, wasn't I? Rect Proof is interesting, yeah. Oh, sorry, ladies and gentlemen. Let's see here. Let me see if I could just... Because I do want to give him some credit. Here's the guy. So this is the guy who... he's the one that created the target. So let's give him credit. He's actually my favorite guy. All right. Let's go back to my Bitcoin. That's comparing, just a quickie, that's comparing. The blue is total 3. Okay, total 3 is all cryptos except for Bitcoin and Ethereum. So we see that total 3 was keeping up with Bitcoin. Bitcoin's the red and the green. Keeping up. And then Bitcoin dominated. It's possible that at some point along maybe after the crash or during the crash, before we rise again, maybe there will be a transition. Maybe there will be a transition at some point where total 3 or altcoins take over and become more powerful than Bitcoin. When that happens, not sure. Yeah. So let's see where we're at. Go back to Bitcoin. So yeah, Credible is the one that created this little chart here, showing a potential to get up to, looks like he's got this at above 100,000. After we go through the shenanigans. Of course, Credi and my other favorite guys, of which you just saw some of them in my Twitter, a lot of them are really thinking that this is the bottom and it's going to go up from here. But at the same time, they are saying that if it breaks below, that they have new targets down low. Yeah. Some of them have a new target at 62.5 and such. I've already told you that I may be the most bearish of all. And I feel more certain that these will occur, and I think they feel less certain that they will occur. That's what I feel like is going on. So that's a difference in our opinion. So yeah, what do we do? What do we do knowing that this could happen? And if that happens, it creates really painful drops, maybe 10% or more in some of these. So what do we do? Okay. Here's one idea. If you think this is going to happen, look, don't listen to me. I am not a professional, although I have been living off of successful crypto investments since 2017. This is all I live off of. I quit my job around 2018, and it is from my investing through the long cycles that I have made money to sustain myself until today. But I get hurt along the way. But I end up in profit in the last 3 cycles that I've been in, right? So that's where I'm coming from. But I'm just another voice. Don't listen to me. But what would I do? I'm not going to tell you what I did do recently. But what would I do? Okay, look. If you don't know what's going to happen, maybe you stay in the market and you just ignore everything for the next couple weeks or a month. Ignore everything and see where you end up. Because if what all of my smartest thinkers are thinking is that whatever down occurs is leading to an up, then you should be okay. But some are saying, including Credible Crypto, the guy that I showed you a second ago, go look at his meme apocalypse video, meme apocalypse. He's even thinking that some of these may be topping out. I don't remember which ones he's saying may be topping out. But as I pointed out, Solana, who knows, maybe topping. Injection, maybe. Render, maybe, maybe not. So I feel safer getting into, I think, Matic. So far, I'm feeling safer to get into GRT. And actually, Shiba, which I know people are thinking, oh, you can't be professional if you're talking about that. But actually, it's shown a lot of health in its chart. Well, I could try to bring the chart to you, I suppose. Anyway, but it's going to drop harder than anyone else probably during a drop. It's going to be the worst drop. So be careful. So either just frickin', if you believe we're going bull, and hopefully you're not in cryptos. Look, if Bitcoin goes where it goes, then even if Solana is turning into a bear, if Bitcoin rises, maybe that bear will be a double top. And so you'll still be able to escape. But maybe it'll drop hard first and bounce into a double top. If Bitcoin rises, I wouldn't be surprised if you end up with a double top with some of the ones that are topping out. So maybe you'll be okay, right? So you can just ignore things for a month and see what's going on. Or you could be risky. I take chances. You could be risky. You could sell everything. And if you want to be risky but have some potential for profit, you could sell all your cryptos if you think my scenario is going to happen and buy Bitcoin. Because Bitcoin is the most bullish, although it may not have the enriching potential, because these altcoins that can fall hard can also rise hard in a bullish environment. So one of my techniques I used to do is I buy Bitcoin when I'm uncertain. I buy Bitcoin when I'm near highs. I buy Bitcoin, all Bitcoin, thinking it's going to rise from here. But also knowing that if it falls hard, if Bitcoin falls hard enough that I feel almost certain that in a bull or bear market, because even in bear markets, we have bounces back up even in bear markets. So if it fell hard enough that I felt fairly certain that we are at a low that should at least bounce up even in a bear market, then what would I do? Then I would sell Bitcoin and buy my favorite altcoins. So that would be one idea I would do, but don't listen to me. I'm not a professional. These are just my own thoughts. But that's something I would do, especially since Bitcoin is showing the most bullishness out of all coins, it would appear. Right? So it has the best chance of rising powerfully out of many of the other coins. So that's one thing I would do, because if I sold everything now to avoid a bunch of big drops that could come, right? And I could be losing on big rises. But these are the choices we make. It depends on what you can handle. But if I sell now and I just buy Bitcoin, guess what? If Bitcoin falls, it falls probably less hard than all of these. So maybe I get, at the most, a 10% drop. I can handle a 10% drop, right? So worst case, I lose 10%. Up here, worst case, I lose 20%, 30%. Who knows during that drop? But if we think everything's going to be, hold on, my recorder's acting up on me. But if we think everything's going to be bullish, then, anyway, I've already said that. I repeat myself. But since that's the most bullish, what if I sold everything, bought Bitcoin, because it has the most bullish potential on the rise, right? And some people say that when Bitcoin does its power rise, that during part of that journey, because there's not a lot of global net liquidity, which means not a lot of cash in the market, that many people will for a while leave altcoins and move into Bitcoin. So there's that. That's another reason that could be good. And so at least I know I'm in a safe place if we rise, because Bitcoin should rise powerfully for a time during the power rise. It may be Bitcoin's season, drawing money out of altcoins for a time. And then when Bitcoin does its power rise, then when it gets into a sideways action, which I showed you that sideways arrow up here, there's a sideways arrow. Maybe when it gets into that, some of the altcoins begin to power rise during that time. Maybe, who knows? But by doing that, there's a genius about it, because if we rise from here, I'm involved in the Bitcoin power rise, and I may just stick with Bitcoin, because getting out during a power rise and trying to get back in the right place is difficult. But if it falls 10% or falls the way that I described it, right down to here, if it does that, then it's the minimum fall. It's the minimum fall compared to everyone else, most likely. And that would be a great time to, if I believe in the altcoins, that'd be a great time during that extreme fall, sell Bitcoin at those extreme falls and jump back into the altcoins, because they're the ones that make the most money on a power rise. I just think there's a little genius in that particular idea. Good luck.